Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Now, extraordinary times, they do create extraordinary opportunities. Right now we are in one of the greatest eras of wealth creation that we have ever seen. Historically, the second quarter, that has always been considered one of the most lucrative periods of the year for commodity traders. So far, that trend is certainly living up to expectations. Traders, they're now pumping money into commodities at one of the fastest paces on record since the 2008 global financial crisis to capitalize on the biggest macro themes that are driving the markets, from a central bank policy failure to re-accelerating inflation to a full-blown global credit crunch. And just in case that wasn't enough, traders, they're now on the cusp of being gifted with even more lucrative money-making opportunities with a global recession on the way, which will ultimately lead to the most hotly anticipated event of all, a Fed monetary policy U-turn. This cocktail of events that is whipping up explosive money-making opportunities and sending commodities across the board, from the metals to the energies to agriculture, surging to record highs. The current macroeconomic backdrop, that is fueling a perfect storm for commodities, and regardless of whatever situation unfolds from here, the stage is already set for commodity prices to skyrocket and reach new all-time highs in the months ahead. Since the beginning of the year, commodity prices across the board, they have been on an absolute tear, firmly positioning themselves as the best performing asset class of 2023. But this could just be the beginning. Conclusive evidence that shows that the current banking crisis was fueled as a direct consequence of soaring interest rates and liquidity risks, but this crisis is now about to get even bigger. Historically, 11 of the 14 tightening cycles since World War II, they have been known to set the economy up for an even bigger crisis ahead. And that's exactly what we're seeing play out right now. Minutes from the Federal Reserve's March monetary policy meeting released last week that revealed that several members of the Federal Open Market Committee, they finally admit that the global economy is heading for a recession following the collapse of several prominent banks in the United States and Europe. Policymakers, they're now convinced that the banking crisis, that has lit the fuse in a sequence of events that will lead to stricter lending conditions for borrowers, triggering a global credit crunch and ultimately a recession. Following the release of the FOMC minutes, gold prices, they came in striking distance of hitting all-time record highs reached in the summer of 2020, and silver prices, they raced above $26 per ounce. Gold has been on an unstoppable run, skyrocketing from the $1,800 per ounce level at the beginning of March to above $2,060 an ounce, notching up an impressive gain of over 14% in the past month alone. Gold prices, they have now risen for a second straight quarter in a row, up almost 29% from the November lows of $1,600 per ounce, scoring their biggest back-to-back quarterly gain ever in history. The bullish momentum has also spilled over into gold price in other currencies such as British pounds, euros, Australian dollars, Canadian dollars, and also Japanese yen, sending prices skyrocketing to all-time record highs. Elsewhere in the precious metals, another star performer has been platinum. Platinum prices, they hit $1,070 an ounce on Thursday, bringing its quarterly gain to just under 25%. That's platinum's biggest quarterly increase since the first quarter of 2008. Surge in demand for safety, diversification, and high returns during this economic period of uncertainty. Whichever way you look at it, there's really nothing historical you can point to for what is going on in the markets right now. The current macroeconomic backdrop, that is presenting savvy traders with an endless flow of generational gains of 10% or higher in a single week, sometimes in a single day. So just think about that for a second. In today's inflation adjusted terms, your money sat in the bank, that won't even earn that return in a year or even 5 years from now. That's why it's no surprise that banks, they're struggling to retain deposits. Logically, it makes no sense why anyone would leave their capital in the bank on a 0% interest rate while simultaneously allowing inflation to devalue their purchasing power when they can achieve weekly returns of 10% or higher by actively managing their wealth through trading. The recent flight to safety has seen depositors, they've withdrawn a total of $508 billion from the banking sector across the last quarter alone. Put another way, that's $500 billion that has already left the banks. Last time we saw outflows of this scale was during the 2008 global financial crisis, and more recently in the pandemic in 2020. Both of these occasions, they led to two of the greatest bull runs in history for commodity markets. Once again, we're starting to see all the telltale signs that indicate we could be on the verge of yet another record-breaking bull run for commodities in 2023. According to Bloomberg, a second wave of deposit outflows that is coming as customers wake up to the existence of high returns on offer outside of the banking system. And when that happens, commodity prices, they could hit all-time record highs. Right now, we have crisis on top of crisis, which, as traders know, that translates to opportunity on top of opportunity. This is the time that traders, they wait decades for, because it's times like these that make millionaires and billionaires out of regular people. There's a lot of traders out there that completely missed out on two of the previous greatest wealth transfers in history, including the global financial crisis of 2008 and more recently the pandemic of 2020. The ones that saw the opportunity and knew how to capitalize, they accumulated life-changing wealth. 6.2 million ordinary people, they became millionaires for the first time during the 2020 pandemic, which is more than any other time in history. I'm sure all of us know a friend, a colleague, or even a family member who made an absolute fortune. Once again, we find ourselves at the forefront of one of the biggest wealth creation opportunities of all time. You don't want to be the person who knew about this, had a chance to capitalize on one of the greatest wealth transfers ever, and missed out again. According to Bloomberg, 1 in 2 people, they've now turned to trading to protect their hard-earned wealth from devaluation, whilst also capitalizing on the high returns on offer in this new economic climate. More millionaires and billionaires, they will be made this time round than ever before. The only question is, will you be one of them? Do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. So far this month at the Gold and Silver Club, we've banked over 13,000 points profit across our portfolio, which we've been transparently documenting with you throughout our recent weekly videos. If you're trading at 1 lot, that's $130,000. And if you're trading at 10 lots, that's $1.3 million. The majority of our clients at the Gold and Silver Club, utilizing our proprietary research-driven trading approach, have already made in excess of 6 and 7 figures, and we're only in April. If you want to supercharge your trading results and make 2023 your best year yet, then go to jointhegoldensilverclub.com now to learn how our mentorship program can take your trading to the next level. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into next week. So firstly, following on from Thursday's report, we called this absolutely bang on, that it was time for gold to take a pullback here to get some profit taking, especially after we'd seen the 3-day impulse move to the upside. Also, alongside that, we've seen hedge funds, they have started to FOMO in. They're bought right at the top of the move. They've missed here over a 15% breakout to the upside. They've FOMO'd in the last week, and basically they're getting rugged with their current position where they're buying way too high. As you know, with commodities, we've been scaling in at the lows here, and really at the point where we are in the cycle right now, we're continuing to bank a windfall amount of profit, hitting our profit target on silver. We've banked 13,000 points with oil off the back of the OPEC cut that we had just a couple of weeks ago on oil. So if we then go back over to gold, a couple of other points to be aware of right now is that commercials, yet again in the last week, they've increased their sell short position yet again. It's been the same with bullion banks. However, we've got the opposite scenario where hedge funds, money managers, they're getting caught with FOMO, the fear of missing out. They're relieving that pressure by buying much, much higher. They've missed the entirety of the move here to the upside, which again, you've seen over a 15% breakout to the upside for gold. They're buying much, much later into this position where they could very easily, essentially, get rugged at these sort of prices. So rug pulled, which is where they're basically bought at the top here, and then the rug gets pulled from underneath their feet and the price action comes crashing back down. And I would certainly keep an eye on that scenario here, because we've continued to be banking profits here as we've seen a huge acceleration to the upside for silver. So we're just within a matter of 4 weeks, over 20% breakout to the upside. We hit our profit target on silver last week at $25.40 per ounce. Very fast profits there. We bought in here at $20.10 per ounce and hit our profit target just in a matter of 4 weeks, which is absolutely immense for this market. Then going back to gold here. So the setup is there now, especially if the dollar can start picking up some momentum as we go into next week. The setup is there. It may not happen immediately, but certainly between now, the end of next week, the week after that, you could easily see gold start to pull back more severely here. Just the overall positioning in the market and the sentiment, which is getting quite greedy for this market. The fear of missing out after you've seen gold price break out in multiple currencies to all-time highs in euros, in pounds, in Japanese yen, in Australian dollars. Now we are at a level where certainly you could get a more severe pullback for the metals here. So I'd absolutely keep an eye on this. There are also a lot of the retail market who got very excited by this pullback here on Friday as an opportunity to buy the dip. And typically, it's not going to be that straightforward that you're just going to get a short-term dip of 2% to the downside on Friday, and then everyone gets filled with their position and they take gold back to the moon here. That's typically not how it works here on the metals. So my expectation is that given the overall positioning from bullion banks and commercials at the moment, is that we could be in for a more severe pullback to the downside here, not only on gold and silver, but also on crude oil as well, is also one to keep on the radar. So as you know, we're banked a windfall amount of profit, 13 trades, 13,000 points, banked 13% gain that we've capitalized with our clients at the Gold and Silver Club, primarily because we kept all of our positions we bought in when there was so much extreme fear in the market. As you know, we were banging the drum that oil was a huge buy opportunity down here at 65 US dollars per barrel. We built into multiple positions here on the energies, and as a result, we were banking a windfall amount of profit once we saw Saudi Arabia come in with their OPEC cut, and with that of 1.16 million barrels per day, and with that, that's where you immediately saw a 580 point breakout to the upside here. However, where we're seeing the price action at the moment, which is basically it's triggered sellers to start coming in to try and fill the gap. It's only just triggered them with a bear trap and then just completely reversed, broken above the swing highs. We've taken the opportunity to bank more profits in the last week on the breakout to the highest level since November of 2022, but as a result, it's also made sure that new sellers that have come into oil here, they have been stopped out by breaking above the swing highs, and likewise new buyers have been triggered in. We've seen it from the hedge fund money manager positioning here, a huge increase in the net long position where over 86% of hedge funds and money managers are now long on oil after we've seen this significant gap higher. So again, they've got FOMO, they've got the fear of missing out, they've bought in much higher and at the highest level since November 2022. So for me, the setup again, it's definitely there for the potential to come down and fill this gap between now and then moving into May. As the saying goes, sell in May and go away. And absolutely, I can see the setup is there, particularly if the dollar starts making a move from the price swing lows here, where we've found support again, going back to the 100 to 101 level. If the dollar starts picking up some momentum between now and the end of the month and into May, you're going to see commodities priced in dollars. They are going to start pulling back and setting up for the next fantastic opportunity for you to capitalize. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. Whatever long-term goals you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions, and most importantly, utilize a professional research-driven approach. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that do not work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis and outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, then you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders, only reserved for professional traders in banks, hedge funds with access to powerful game-changing insights, including where the banks and hedge funds, they're buying and selling in real time, the key liquidity zones, so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles and intermarket correlations, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation that we've ever seen. And if you want to successfully capitalize on the huge money-making opportunities and build significant life-changing wealth, there's no better time than right now. If you want to upgrade your income, then you need to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our Private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.